Get ready before life happens. The podcast helping you navigate life's what ifs.
Welcome to Get Ready Before Life Happens. I'm your host, Tony Stewart. Today I'm joined by Nathan Sanow, President at MasterCare and LTC Consumer. Nathan, welcome to the podcast.
Thank you. Thank you for having me. Look forward to it.
Yeah, excited for the conversation. So, let's jump in. Tell us a little bit about yourself. What is your origin story and how did it lead you to long-term care planning?
Well, I got to long-term care planning and insurance how most everybody did or does. They kind of fall into it. So I'm a Pacific Northwest guy. I live in Washington State, born and raised in Oregon. And I was actually at Intel in high tech before insurance. And my manager's wife worked for an insurance company. This is back in 2001. And I made that jump at that time to be a sales rep. And that's how I got in the insurance industry for a big Unum, a big group life and disability insurance company. And then I had a friend of mine who actually, my previous business partner, owned MasterCare, the company I now own. And he was looking for a successor. So about 13 years ago, and we've been friends for 25 years. He's like, hey, would you consider working together and being a successor? And so I made that jump from corporate America to buying this company out and got into long-term care planning about 13 years ago.
Well, that's fantastic. Well, let's talk about that a little bit because coming from Intel is a very different business in long-term care. I mean, what did you take away from your background at Intel that probably most people in the insurance business wouldn't know?
I'll give you a perfect example. So Intel is bigger, faster, stronger, cheaper, bigger, faster, stronger, cheaper. And this is 90s, late 90s, 2001 when I made the jump. And I'll never forget. So I'm at Intel, very structured. You didn't have to go to a meeting without a pre-published agenda. You had what's called ARs. If anyone has worked at Intel, they know exactly what an AR is, action required. You recapped at the end of every meeting. It was a very structured, process-driven company. I go to an insurance company. I'm a sales guy. I'm new. I'm at this beautiful resort that Unum had flown all their insurance people to. There's this home office person that's bringing up all these ideas, and all these people are asking, like, what about this? What about this? No one's writing anything down. And I'm sitting here thinking, this is so inefficient. This needs to be written. All these ideas are not being captured or whatnot. So I raised my hand and they said, yeah, I said, hey, VP, whoever this person was, you haven't written anything down. Can you recap what you've committed to getting back to the group today? And she said, what's your name? Nathan Sanow. What office are you from? Portland, Oregon. I'll write that down and I'll get back to you about that. And I learned very quickly the different of high tech, go fast, break things to insurance, hierarchical, slow, plodding, and that kind of stuff. So I try to blend those two worlds where I still bring a lot of my innovation from Intel and continuous improvement from Intel into the insurance industry, which desperately needs it.
Yeah, I mean, that's a criticism everybody has about the insurance industry is that it's inefficient and plodding and the same old thing and just not, you know, into high tech, that the
Yeah.
insurance company has come begrudgingly along. And some of it is by design and some of it is just, I don't know, just, locked into the insurance company's structure.
Yeah,
So,
institutional inertia. I remember when I went, so I was at Unum. I ran a life and health company for a health plan in a number of states. This is 2010. They had just moved to Microsoft Outlook from Lotus Notes. And I'm sitting there thinking, Lotus Notes, no one's used that for a decade. Well, they still had in 2010. And so, yeah, insurance companies move slowly for sure, unfortunately.
definitely. Now, there is something to say that you do want your insurance companies to be somewhat risk averse because that's a good thing, but at the same time, not so good. So we
Yeah.
should probably move on
Yeah.
because we could definitely continue on this vein for a long time. Is why is planning for long-term care important?
Yeah, so long-term care, which really, but let me define it for you, is really care that you need to care for yourself personally when you're unable to do that in the future. So that could be because of a stroke or an accident and basic activities. So eating, bathing, transferring, like getting up out of a chair, that kind of thing. Your health insurance or Medicare, that's going to cover all of that. But it's really those personal things that as we get older or can happen with an accident or illness that we need care at home. And the reality is the good and bad news. The good news, we're living longer than we've ever lived as a generation, as a society, but that has brought along a lot of unintended consequences of we're living longer with chronic conditions. And so it's going to happen at some point in someone's family's life. You're either going to be a caregiver, you're going to have a family member that needs care, or you're going to need care yourself. And so having a plan of how do you want that care provided? Who's going to provide that care for you? Do they know that? And then how is that care going to be paid for if you need it? Is just part of what everyone should have, just like a will or an estate plan or whatnot.
Yeah, that's something I just released an episode about that everybody needs an aging plan with Annalie Kruger, who I'm sure you know, who
Hmm.
talks about that because it is going to impact all of us if we're fortunate enough to live long enough. Um,
Absolutely.
and, I think, the next question is what is long-term care insurance? And as we get into that, I think if you can really be clear for people is, what is different about long-term care insurance and long-term care? Because I think people get confused about this just like they do with healthcare costs and medical insurance.
Yeah. So what we commonly say at LTC Consumer is everyone needs a long-term care plan. Not everyone needs long-term care insurance. And it's really the insurance piece is a funding mechanism of that long-term care plan. So when you think of long-term care plan, unable to care for myself. What setting do I want to receive that at home, assisted living, whatever? Who's going to provide that care for me? Is that a family member, friend, professional? And then most importantly, how is all of that going to get paid for? Do you have liquid assets that you can tap, or you don't have any money, so it's going to be on Medicaid? And that's where long-term care insurance comes in. So what's commonly misunderstood is people, especially as they get older, think, well, somebody pays for this, so Medicare pays for it or health insurance pays for it. And the reality is they don't. So health insurance, Medicare is there to pay for your doctor visits, prescriptions, rehab, surgeries, those kinds of things. But if you need care at home or you needed to go to assisted living facility, memory care, that's only going to get covered by long-term care insurance. The caveat to that is Medicaid. Medicaid does cover long-term care and costs, but that's really a government welfare program. You've got to have less than $2,000 in assets. And the reality is, great, even if you qualify in Medicaid, there are a waiting list for many states to even receive any care. So that's why long-term care insurance is really that middle gap for people to pay for the care that they need when they're unable to care for themselves.
Yeah, and that brings up a question though, is, when we think about long-term care insurances, oftentimes people go, it's just so expensive. But, at the same time, as we think about the costs of care can just blow people away. How do you balance that out and really think about, is long-term care insurance worth it?
Yeah, so there are lots of different ways to look at it. I'll give you a real life example that sadly happened to my own VP of Ops this winter. So her mom had been chronically ill for decades, very, very ill, and then fell right after Thanksgiving, had to go to the emergency room and made a decline, and she eventually passed away a few weeks ago. But over the December, she came home. They looked at home caregivers. This is Central Oregon, 24-hour home caregiving by three different people, $37,000 a month. So now this is
Wow.
the most expensive care you can possibly get. You're getting a professional nurse 24/7 in your home. So most people are not going to be able to afford that, obviously, nor will they need that kind of a care. But that gives you a real life data point to say, Central Oregon, it was $50 an hour for that home health aide. So when people are planning, most people are planning for some kind of cost share. We don't want people to be insurance poor. This is a policy that they're going to buy generally in their 50s, and they're not going to need generally until their 80s. So we want to make sure if somebody buys a policy, it's built financially for them for the long term. So it's really trying to find, okay, well, if you look at home health care for maybe 8 hours a day, 5 days a week, because a family's going to help out, okay, now you're looking at $5,000, $6,000 a month. If you're looking at a facility care around the country, depending where you live, other than like New York or Alaska is the most expensive, you're looking at, eight to $10,000 a month. And so when we advise people, it's looking to say, okay, what's the problem you're trying to solve? How much of that risk do you want transferred to the insurance company versus your own assets? Knowing that this may never happen to you. You may, go very quickly and may not need that care.
Yeah, I love that is one is to think about insurance as a cost share. And I think the other thing too that drives me crazy with certain forms of insurance is people go, well, what if I don't use it? And I'm like, well, think about your homeowner's insurance. If you don't
Exactly.
use your homeowner's insurance, you're really happy your home didn't burn down. Yeah,
Exactly.
that we view it as a positive. And that's what insurance is. It's, as you point out, it's leverage against a potential event, and you have to measure whether that leverage makes sense or not. So one of the things you and I talked about pre-show that I think is really important is about being careful when shopping for long-term care insurance. And you mentioned that you don't want to apply and get rejected. Could you go into why that's so important?
Yeah, so if there's one thing that I would have your audience take away from this discussion, it would be this. When people apply for long-term care insurance, they really get one bite at the apple, and it is critically important they work with somebody, whether it's a firm like mine or somebody that specializes in long-term care insurance. Because when you apply, we tell people you're going to pay for the insurance with your money, but you're really going to buy it with your health. So it doesn't matter how much money you have. If you're not healthy enough to qualify for the insurance companies aren't going to extend coverage to you. And different insurance companies will accept different health risks. So at LTC Consumer, we represent 10 different insurance companies of varying markets. And so each one will have their own wrinkle of, well, we will accept this health condition or that medication, we won't, or on this one. If someone applies for long-term care insurance and they're medically declined, they are now pretty much uninsurable because every long-term care insurance company on their application will say, will ask, have you been previously declined for long-term care insurance? And if you say yes, they're pretty much going to say, thank you. We don't even bother submitting your application. You better have a remarkable story about why your decline was really invalid. There was a mistake or something, because most insurance companies, once you mark yes, they're not going to do that. And then if that person's like, oh, the insurance company is not going to know, they will, because there's the Medical Information Bureau that everyone reports to that says, yes, you applied for this coverage and you were declined. So they can ping that to find out whether that was the case or not, anyways.
Yeah, and that's a good rule for people, especially with long-term care insurance, but with any form of insurance, is because you do have to explain if you got declined somewhere. So it's good to work with an agent. And it also saves everybody a lot of time if the agent knows the right insurance company to place you with. Could you just define what the Medical Insurance Bureau is for people who aren't familiar with it?
Yeah, so the medical MIB, it's not Men in Black, it's a Medical Information Bureau, is really a reporting agency. Think of it like a credit monitoring for banks, your FICO score, or, TransUnion, to say, okay, what you had a life insurance or long-term care policy that was declined. You had some really high level kind of insurance speak to just do another sanity check to say, okay, this person applying for insurance, whether it's life insurance or something else, are they really being truthful? They said they had this policy or didn't have this policy. They got approved, they didn't get approved. And that's what the MIB kind of reports out for insurance companies.
Fantastic. Thanks for sharing about it. And for people watching and listening, you can contact the Medical Information Bureau and request not necessarily your records. I can't remember. Do you know exactly what you can request from it? I can't recall the exact, but you can get an idea of what they have on record about you.
Yeah, exactly. It's more insurance speak than is beneficial, but yeah, people can certainly find out what's in there.
Yeah, so the records are available to some degree to the public. Um, so, let's pivot to AI. What do you see as a role of AI in long-term care planning?
So it's been very interesting. It was a couple things. We use a AI platform that we helped develop where with a company called Pathwork. So they're an AI health underwriting tool that's available for agents. So I can literally now type in, instead of knowing 10 different companies in health insurance risk, I can type into the AI bot and say, okay, this is Nathan Sanow, Washington State, age, medications, and it'll tell you, oh, this company is good, this one's not, that kind of thing. So that's certainly huge time savings for us. We're getting more inquiries. So to give you scale, my team will help probably 10,000 people a year look at long-term care planning. That's all we do. And we've actually had people say, I want to buy this specific company, this specific policy, and these benefits. And when we asked, how did you get that info? ChatGPT told me to. So users are definitely using it more to get educated on how it works and what it does. However, I don't see, at least for the next number of years, because what we do is confusing for most and insurance isn't super exciting for most either. They may do research online, but they'll want a specialist to say, okay, Tony, am I right? Am I doing this right? I was thinking about this, and just to kind of help advise them through the process. But it'll help. I mean, it's definitely, we use it in our company every day for all kinds of different things. But I don't know in the near future it's going to replace an advisor. I think there's still going to be value there.
Yeah, I completely agree. I think AI is going to take care of some of the mechanical part, like you're talking about, is going through each company's requirements, which companies, view which medication a certain way. And, because AI can sort through that in seconds, where, somebody would have to call, email an underwriter and say, hey, what do you think of this case? And stuff like that, that I think, that is where AI can really help. And I agree with you that I think humans will still have a role because of, that personal touch that people look for in making these decisions. So, do you think that AI will make insurance easier to understand, or is it going to still remain this thing that people go, oh my God, it's insurance. I don't even want to think about it.
That is a great question. Um, and the honest answer is I don't know. I'm still amazed. Just earlier today, I was using AI at ChatGPT. We have the professional version to do a contract comparison. So I had three. I was curious how this was going to go. I took three carriers' contracts and I said, hey, give me a contract comparison by provision that I can share with the client. And it was amazing to me how much it still hallucinates, how it's just, here's a simple contract, what's your elimination period? And it was right probably 90% of the time, but then 10% it was just not right. It just didn't understand how things were. So I think it'll obviously get better, but will it still take the place of a human, and will people really want that even if it could? Here's the other data point that I have, and I'll rely on my Intel high tech days. So 1999 .com, height of the .com. I remember it very, very well. I lost a lot of money in that, like everybody else did. 1999, everybody was saying retail is dead. Malls and brick and mortars are gone. If you're a financial planner, you're out of business. If you're a realtor, you're out of business. Everybody's going on the internet. This is how business is done. I did speaking at a conference. There are more financial planners today than there were in 1999 by a wide margin. There are more realtors today than there were in 1999 by a wide margin. Both things are very different, but in the way business is done, but there's still that person that's involved. So I'm not convinced AI is going to be the end all be all change. Even if it could be that good, you can still buy a house. You don't have to talk to a financial planner at all. You can do all your own investments, but there's still a lot of people are like, yeah, I could, but I'd rather have somebody I trust and know help me. So I think it'll fundamentally change the way we do business, Do I think it's going to replace people in insurance and that kind of thing and make it easier to understand? Maybe. Will it replace a lot of people? I don't know. Maybe not. If you're health underwriting, I think there's a lot of tools in the technical side like that that would be advantageous and can get automated. But I think there's going to be that still that value of an agent or having a relationship with a financial advisor.
Yeah, and I think that you had the operative word there is that it's about the relationship. And I think for any advisor or agent or coach or who, whatever role you're in, if you're working with a consumer, it is about having a relationship. That's, the most successful, insurance agents that I know and financial planners are all ones who are all, their business is relationship driven.
Hmm.
Yeah, they can do great financial plans and that, of course, or put together insurance plans, but they have the relationship. So I completely agree with you. And it's hard to say what the real impact's going to be. We don't know. Um, and as you point out, is like, yeah, AI it's still learning. I mean, which is part of what it is. It's a self-learning,
Yeah.
whatever you call it.
And for your financial advisors, I'll give you the same one. So I've gone in and out of financial advising, meaning I've done my own index funds and I've had a financial advisor. And I recently, a few years ago, went back to a financial advisor. And this is what he said, which has struck me. Like, Nathan, okay, let's say you've got $1 million in investments and the market goes down 20%. You just lost 200 grand in investments. That's gonna sting. You're not gonna like it, but is it really going to make you question your investment theory? You're young enough, probably not. You're gonna stick with it. Okay, let's take that at $10 million. Now you have investments of $10 million. Same market happens, it goes down 20%. You lose $2 million. Now you may behave a little bit differently because replacing $2 million is a lot harder than replacing $200,000. And that's where a financial advisor can come alongside and say, hey, stay the course. Don't freak out. This is okay. And when he said that, I thought, okay, I can see the value of that, whatever your risk threshold is, to have that person. And AI is never going to do that. Your AI agent's never going to proactively reach out and say, hey, Nathan, it's okay. I mean, maybe it will, who knows? But it's okay. Don't change your don't do something foolish with your money where that relationship and that person, that's where there's a lot of value.
Definitely, definitely. I completely agree. So, as we talk about it, how can insurance agents and financial planners think about integrating AI into their planning process?
Yeah, so I'm a Intel high tech efficiency guy. And if you were in my industry, you would know I am by far the most innovative in our market, which cuts both ways. Means I get to spend a lot of money and time on things that don't work and some that do. But I think continuously challenging the way you do business and looking to offload and develop tools or resources that can benefit you. So what I look at is I look at non-insurance industries. So I'm listening to tech podcasts. I'm reading stuff about Fidelity and Amazon and what's going on in consumer technology systems. So then I can see, okay, what they're doing. Can I extrapolate how I can use in my own practice, what systems and technology they use? Another key thing, we have 5 kids from the age of 24 to 17. I always say, whatever they're doing, the rest of us are going to be doing in a couple of years. So I always look to them to say, oh, like my kids years ago, they would never make a phone call. They'll do a FaceTime, they'll text. So my sales team moved to being more video basis way before COVID and moving more text based. So those are the things that I look at to say, okay, where are other industries outside of us? Because they're far more nimble, like we talked about, and what systems and things are they adapting that I can look at practicing in my own business. The last thing I would say, I tell my team this: if we do only things that work, we're not being innovative enough. So I'm willing to spend money on ideas that don't work and being willing to invest time and effort and money on new technology, new thoughts and processes that may not work. Because if they always work, you're playing it too safe. You're just kind of nibbling on the fringes than really trying to do something different.
Yeah. Well, and that makes me think, of Michael Jordan. I'm a hoop head. And, that was one thing is he was continuously, even though I think he was the greatest. I don't know if you agree,
I'm
but
100. I had Michael Jordan's winged his arms across on my wall as a poster. So I'm actually MJ fan. I actually met him at one point, and yeah, so I'm a big MJ's the greatest basketball player of all time. We would both agree.
yeah, fantastic. Everybody who's watching and listening, you can like LeBron, but this is Team MJ here. But the, the point that I actually want to make is that MJ was consistently always working on his game. Is he never, was satisfied with where he was. And so I think that's the important point is so when you take a look at somebody like MJ who really didn't need to work on his game, but that's what made him strong, is that
Hmm.
he was always working on his game. And that's something that we should all take away, as you point out. If we stay with the status quo, we're actually going to fall behind.
Exactly. And that was one thing Intel that I take to this day. So whatever if you had a metric, you change the metric. So it was continuous improvement. If you had a 95% success rate, okay, let's try to get to 97. Doesn't and where a lot of other industries, hey, I've got a 95% success rate, I'm good. Okay, but maybe you could get to 97 or maybe you could get to 98. It's a continuous improvement process. And that's just I grew up in that. I swam in that. So it's second nature to me now.
Yeah, so I think it's good for everybody to think about and, to think about in your own business, to think about on your financial journey and on your life and professional journey is, continue to improve. It gives you a purpose and, it moves you forward. So, Nathan, to wrap up, I have what are called the Get Ready Hot Take Trio. And these are three quick questions that I ask all of my guests. The first one is, what's one myth you're trying to break regarding long-term care planning?
I would say one myth is that people think it's too expensive. It's less expensive than most people actually think, and it's not going to happen to you. And the reality is 52%, the latest stats, 52% of us are going to need professional long-term care for at least 1 year or more. And so if one in two of us are going to need that, you need to plan for it professionally, whether that's you have insurance or not, whatever, but having that plan for them is critically important for everybody.
Yeah, so just real quick, before we get into the next question, what resources do you have for people who are looking at long-term care planning?
Yeah, so if they go to our website, ltcconsumer.com, there we have all kinds of articles, blog posts, that kind of thing. One common question people get is, well, how much does it cost? And we used to have a quote engine years ago, and we took it down because people would run quotes and not know what it means. And it's so varied. It's like saying, how much does a car cost? Okay, well, I could sell you a $500,000 Rolls Royce, or I could sell you a $20,000 Toyota. So without knowing more, that's why it's so specialized in your health to know what your health is. They can run quotes and compare it. But our website's got all kinds of different resources and things about forms and tools and yeah, all kinds of content.
Fantastic. And for everybody watching and listening, that will be part of the wrap-up question, but of course there'll be links to Nathan's website so you can check those out. I think the other thing that you hit on there that is super important is that people oftentimes get wrapped up in the premium when they're thinking about insurance rather than thinking about the coverage that they actually need.
Hmm.
What are your goals? What are you trying to achieve? And that's where we need to start from. And the insurance industry, unfortunately, always starts product first historically rather than thinking about like, okay, what does this person actually need? And then trying to find the right solution for that. So
Yeah.
that's a great
And the
perspective.
other part is there are in the last 2 years and in the next 12 months, there is more product innovation going on than I've ever seen in the 13 years I've been in the industry. There's now annuities that are guarantee issue. If you're on claim, you can still buy annuity. That just came out. There are short-term care plans. There's all kinds of different options that are new and are coming that are great. And we need different solutions than just, what we've had for the last 10, 15 years. But that also means whether, again, you work with a firm like mine or somebody else, you work with somebody who really understands the market so they can bring the different resources and solutions that are better fit for what someone's trying to do.
Yeah, because there is a downside of having too many choices is that, then you get into analysis by paralysis because there's
Yeah.
just so much that to some degree, I'm kind of like, I miss the plain vanilla product to some degree because it was like, okay, it's going to provide this. And, and it's great to have all these permutations, but sometimes, yeah, you need a specialist to help you sort through it.
Yeah, for sure.
So the next question is, let's get out the time machine. If you could go back in time, knowing what you know now about long-term care planning, what advice would you give your younger self?
Great question. I would give my advice to start thinking about it a little bit sooner. Most people think about it only after they start realizing the frailty of their life, or they see that in their family, and sometimes it's too late. So we always say, well, when's the best time to buy car insurance? The day before your accident. Best time to buy life insurance is the day before you die. And the best time you need long-term care is the day before you need it. And if you can predict that, you don't need insurance at all. And so being able to say, okay, I can qualify it and it's going to be less expensive when I'm younger than waiting too long to find out, oh, I've got a medical condition that maybe prevents me from getting it at all.
Definitely, definitely. And when we're talking about long-term care planning, is we're talking also, beyond insurance. So just to put an age on it, so, I mean, I would say people in their 40s should be thinking about it as
Yeah.
part of their retirement plan. What do you think?
I would absolutely agree. Yeah, 40s to generally people are in their 50s where that's trending younger each year. Really, once you get to be about 65, that cost curve goes up pretty dramatically. And then the other issue is chronic health conditions kick in generally that make it harder for people to get. But yeah, I would start looking at it, especially if you've got any kind of means in your 40s, and you'll be surprised how really inexpensive it actually is especially at those younger ages.
Definitely, definitely. That's great advice. So to wrap up, what is your number one tip to change the way we think about long-term care planning?
I would say it's not about nursing homes or getting old. It's about control and dignity for yourself. So the nice thing with long-term care planning is it protects your family because you can decide ahead of time who do you want to provide that care, where do you want that care to be provided, and how is that care going to be paid for before the crisis hits. And what we have seen many, many times is families really pulled apart when they haven't planned ahead of time. Forget insurance or what have you. One thinks this should happen for mom or dad. The other one thinks this should happen for mom and dad. That's Anna Lee. We talked about Care Right. That's her entire business, are families that are stuck in that crisis. And then being able to plan ahead of time and communicate with your family to know, okay, this is where I want to receive care, how I want to receive it, and how it's going to get paid for is very important. And the other part is just how's that going to get paid? Are you going to self-finance with your own assets? You got to think about liquidity when you need it. Are you going to buy insurance to help fund that? But that, yeah, just having that part of like being your will. Most people, oh, I need to have a will. I need to have an advance directive, that kind of thing. Yes, you need to have a long-term care plan. That's part of that conversation, regardless whether you're 75 or 55.
Yeah, and that's valuable advice for people watching, listening. There's also an episode that if you may have seen it, Aging Plan, How to Create an Aging Plan with Carol Chang, and where she talks about, starting early, earlier than you think you need to. And as you point out, the other thing is that families need to communicate about these things, is
Yeah.
that is a huge cause of, sometimes permanent divisions in families these caregiving issues. And counting on your kids to be caregivers is not a great aging plan. We'll just say that
No.
too, right?
Yeah, and it sounds great. I want my kid to, and the truth is, most all families are going to do the right thing for our family. You know, if my parents needed care, I'm going to do whatever I can to help provide care for them. The question becomes, how does that impact my life, my family, my retirement, and the family dynamics? And what we've consistently seen is every family's got their simmering dynamics below the surface, you know, age wounds or conflicts or whatever. And then that crisis happened and it erupts out onto the scene where one kid thinks this and the other brother thinks this and the mom thinks that. And having that communicated ahead of time and planned just helps eliminate so much of that conflict.
Yeah, I love that. Avoids the conflict. So, Nathan, where can people learn more about you and Mastercare and LTC Consumer?
Yeah, so if they go to, so Mastercare is the corporate company. We do some other things. LTC Consumers are consumer brands. So if they go to ltcconsumer.com, they'll be able to find resources, enter their information, get connected to one of my sales team. The other nice thing we do, we shop the entire market, even carriers that we don't represent, just so that people can see in a very transparent way. Here's the plans for every company that is in your state, and it's very transparent. One of our focuses is on education, not on sales. Again, everyone should have a long-term care plan, but not everyone needs long-term care insurance. And so what we look at is if we can help someone come up with that plan, we've done our job. If insurance is part of that, great, but that plan is really what's most important.
That's awesome. And so I'd encourage everybody to check out Nathan's website. So there'll be links to the websites if you have access to the show notes. So you can go to the show notes and find the links. Nathan, thanks for joining us on the Get Ready Before Life Happens podcast.
Thank you for having me. I appreciate the opportunity.
Yeah, this is a great conversation. And thank you, everyone, as always, for tuning into this episode of Get Ready Before Life Happens. If you learned something today to change the way you think about long-term care planning, please be sure to subscribe and to share this episode with a friend. You can also go to my website at tonystewart.com to join the Get Ready movement. Until next time, let's change the way we think about money.